One of the most common and best known and perhaps most understood is the gold-silver ratio. And so it doesn't mean that silver has to go to $300 because of how the ratio might behave. But at least for me, it indicates the potential. So if you look at forecasts for silver prices, and so I'm not, for gold prices, so I'm not the only one who thinks gold will go to ultimately 5,000 or even perhaps 10,000 in a speculative mania. You've got people like Jim Rickards, Shane McGuire, who ran a gold fund for the Texas teachers retirement system. You've got Scott Minerd of Guggenheim, and you've got the In Gold We Trust report that forecasts relatively easy forecast to close to 5,000 in gold, and perhaps up to about 9,000, depending on how inflation plays out. So, all that to say that if you take even $5,000 in gold, and you look at the gold-silver ratio when the ratio bottomed in 1980, and it took 15 ounces of silver to buy an ounce of gold. So based on that ratio, at $5,000 gold, you're looking at $300 silver. I believe silver would get to that kind of level in a speculative mania, and that if you get there, start selling, because I wouldn't expect it to stay there. And the stocks would explode. I wouldn't expect the stocks to stay there either at $300 silver. And you're right, it would be detrimental, very detrimental, in fact, for the industrial applications, because silver has become irreplaceable in so many ways in industry. So to have to pay that kind of money for silver, it's true that in many of those applications, it's very, very small amounts of silver.
Right.
So there's a fair bit of tolerance in terms of the price they'll pay for the silver that goes into those applications, but it still would wreak havoc. So realistically, I think you're going to have to look out 5 to 10 years. These things always take longer, and I know, like you said at the beginning, people are impatient.
We're tired of being patient.
Absolutely. But then you shouldn't be in this game. It's not for you. It's not the place for you. People complain about $22 silver, but you had plenty of time to buy silver at $15 in 2018 and 2019. It was hovering at 15 for almost a couple of years. We're over 40% above that right now. No complaints from me in that respect. Silver was up 3,700% in the 1970s. It started out at $1.30 in 1971 and peaked at $50. So that versus gold, that did a 1,400% return. So silver more than doubled gold's return.
So there is a precedent of
most definitely
something like this happening. I'm curious as to why we never breached the 1980 highs, Peter.
It's
been 40 years.
Right. That's a good question as well. It got to 49 in 2011, and that was somewhat of a speculative mania as well, and it sold off pretty quickly. But silver just behaves like that. It goes through long periods of consolidation, trading sideways. It ran to $30 in August of 2020, and then since then it's been in a range between about 21 and 29.
Okay.
I would say yes, absolutely. Okay. Even if it doesn't stay there, I think that the odds of some kind of a bubble is very likely. The ratio is at 82 right now. If you look over the last, say, 20, 30 years, it's averaged about 55 to 60. So we're already considerably above the average. Again, there's nothing that says it has to go back down. But if you just look at how it has behaved, that's a strong indicator of where silver is likely to trade relative to gold. So the odds are that the ratio will come back down at least to, say, 55 to 60. That's a reasonable target. And then again, in a speculative mania, I don't see why it wouldn't go back down to 15. Because if you look at that ratio, it's also an indicator. I'm not saying that it would go there, but it's indicative of where silver can go. Because if you take, say, $1,900 gold, and you use that ratio of sort of 9 to 1, you're in the $300 range again for silver. And that's, again, one of the reasons I have that target. 54% of silver goes to industry. And my view is the market's, looking at the risk of recession and how that might affect the demand for silver over the next, say, 6 to 12 months or so. And, again, that being a big part of silver's uses, industry, solar panels, electronics, electrical, EVs, medicine, medical applications, equipment, and so on. So I think the market's sort of pricing that in, and it's keeping pressure on silver.
Okay.
My thesis is that if you look at what's happening with inflation, and if you look at how other assets are hurting. In fact, since the start of the year, gold is, let's say, essentially flat. So anyone holding physical gold is a winner right now. If you look at that versus stocks, bonds that are down 20%, commodities as a whole since the start of the year have exploded. They're up 44%. Yeah. So gold and silver are both commodities. And so the trade in commodities is indicative of where silver and gold are likely headed.
I have this chart here in your book. Approximated gold price in 2030 by distribution probability in US dollars. This is in your chart, it's from Incrementum.
That's right.
And you have not a normal distribution, a skewed distribution, but it peaks around $4,000 to $5,000 in terms of its highest probability. So 2030 is 8 years away. That's about a 2 times increase 8 years out. I'm not going to comment on that, but I'll let you describe or explain this model and how they came up with these numbers.
Right. So they look at the odds based on the growth in inflation, the rise in inflation and the growth in the money supply, and then they also look at the odds that that will actually be significantly higher than what we've been experiencing over the last, say, sort of 10 to 15 years. And if you project that out, that's where they get to a rate. I think it's a price of gold that potentially would reach as much as $8,000 to $9,000.
$8,000 to $9,000 is in their lower range of the probabilities.
If you look at the bottom of that paragraph,
okay,
you'll see where
model suggests a gold price of $8,000
exactly
by 2030. Interesting.
Yeah.
But how does that work though? Because it is a lower probability number.
Right. And so what it is that they're saying that they don't discount that possibility, okay, given the way we're inflating the money supply.
Yes.
Right. So yes, it's been relatively crazy over the last say 10 or 15 years, and they're saying that if you look at the way gold behaved in the 1970s. Versus what we've done to the money supply now, that there are relatively high odds that we can actually get to as much as $8,000 to $9,000 gold.